Welcome back after what, a month in Europe?
Yeah, but hell, it's been a long time. I think it's been maybe 8 years since I took a lunch. So I think I
There you
was
go.
due.
Go.
Everybody's like, "How was it?" And I'm like, "Man, I'll tell you what. Just to sit down and kind of get lost for a while is kind of neat." But
Yeah,
man, I've always been a big history guy, so it was pretty neat for me to go see where they did medieval stuff and World War II things and
pretty cool.
all.
Well, I figured with you coming back, I made a little bit of an executive decision. I wanted to do a special kind of a kick things back off, get rolling again, and talk about a time to take a little time off. There's been a lot of crazy stuff that's gone on. It's also just, I don't know, a tough time in general all over the place. So I figured we'd sit down and I'm gonna ask you a bunch of questions. And I want the 40 years of experience in banking, the macro perspective of kind of all this different stuff that's going on, but I want to drill down on a few things if that's cool.
I think that's great. I took some time when I was over there to really talk to bankers, talk to companies, talk to businesses, and just really thoroughly understand, what the hell's going on. And it gave me a whole new perspective. Then, of course, I got back here and really dove into all the new legislative issues, everything, getting myself caught back up, talked to a ton of bankers in the last 2 weeks, uh, just kind of get the temperature of the room.
Yep.
And I'm not sure
Let's
I've got
go.
a lot of good news for you, but I'll try.
All right. All right. Well, let's start with just the economics, man. Let's kick off with interest rates, debt, all that world, right? And thinking about what was it? Well, everybody was talking about they're going to cut in March, and now it's like maybe this year, maybe not,
Yeah,
right? And the if you look at the projections on the rate, I mean, they're out a long way and they're rising again, which is interesting.
well, you can watch the 10 year and it'll tell a pretty good story for you. But there's the idea that we were going to get six rate cuts. I don't know who even said that and was stupid enough to actually say it. But there's also the converse of that. So now everybody is in a spot where it may be tail end of 25 before they lower interest rates. And no, that's not accurate. And I don't think anybody would, you know, sound understanding of markets and just look, you can't have $35 trillion in debt, 36 trillion, whatever the hell trillion it is, and fund that debt at the level that we're at without crashing the system.
Mhm.
And I think we've already seen some cracks. And because they happened last March, everybody's like, well, okay, we're all good. No, we're not. We have a frozen mortgage system, which basically means a frozen bank system.
And labor's
They're
market.
going to lower interest rates, or we're going to go back to sticks and stones.
Good call out. Good call out. So thinking kind of through that side of the world, let's look at kind of the banking side specifically, right? Obviously, I mean, I don't know that I want to make a loan right now, right? Because everybody's debt to income and everything else is messy. Credit card debt's to the roof. And if I wanted to make a loan, I don't have any damn deposits to do it with, right? And that whole world is interesting, as not to
Yeah.
mention the margins and everything, NIM is a backdrop to that. So what do you see there?
Well, I saw the AOCI, you know, uh, when you've got bond valuations where you go way out on your time frames as they're just about to raise interest rates at an unprecedented level and speed and amount, it's going to hurt your balance sheet. And we can all sit down and go, well, you don't have to sell those bonds. And if you just play the long game here, yeah, and then you at the very least call it a missed opportunity. But at the worst, it could crash your bank.
Mm-hmm.
And you and I have talked a bunch of times about, hey man, we could have a digital bank run. Well, we saw that with SVB,
Yep.
and that's literally what that was. There is no answer to that, right? I mean, and you and I have talked about potential ways to get through that. We're so far away from that right now. We still have that, and we'll have that hanging over our heads. And we have to, people talk about restore confidence in the banking system, which is pretty damn hard when you have things like Synapse and that kind of stuff going on out there. So uh, we've got bigger problems, and I think there's a lot of. You take the gloves off, okay? We
Yeah,
have an
shoot.
administration right now that is so anti everything. I can't even imagine how you could get economic growth going again without just creating another disaster in debt. And the debt alone and the financing of the debt is going to create its own level of inflation. And so you're going to fight this situation of how do we get back to 2%? Well, you can grow your way out of it. And that's really hard to do when growth is coming from the government. So
And
there's a lot
think
of
about
problems
growth
and
for
a lot of
energy and
issues.
oil. Energy and oil, I mean, you think about when you look at price of diesel and how that affects its way through the supply chain, right? I mean, to the farmer in the truck, right, or the tractor, or shipping things goods to market, it's tough.
And when you
That.
live in New Jersey, it's hard to understand how a cow got to that market. And
Yep.
when you see all of the parts and pieces, I mean, you went through the fire and you helped all those folks out. And you see, you know, what was the biggest need? You know, hay.
Yeah.
It's like, didn't think of that. It wasn't that we burned all the cows to death. It's we're going to starve them all to death. And it's like, well, okay, let's bless the market there. And,
Yep.
And then come back with who's got a cow calf combo right now that's anything reasonably affordable. So it's
Nothing.
long-term problems. And then the shipping of all that. I don't care if it's nuts and bolts or pound of meat. You got to ship it somewhere and you got to get it there. When those costs are high, when you're a net exporter of damn near anything, that when we talk about, you know, import export, and when you run deficits in those departments, that's just like giving away opportunity, growth, and wealth. All right, so we supplement that by borrowing, and when you're the world's currency, you can do that. Let's hope to God we don't screw that up, and that's why the banking system is so important. Okay, so kind of walk backwards from that concept, and you're going to get to a point pretty quickly where it's like, if we can net export one of the premier things that the world supply chain works off of, right, that's a winning hand. We blew that. We had an opportunity. We could potentially have that again with administrative changes, but until we do, you know, we just can't sit here and look at the future with all this glee and go, everything's going to be okay if they'll just lower interest rates. It's like a little deeper than that, but we're on the wrong path, and I think anybody with a brain can see that.
But let me ask you this. So we've got your macroeconomic backdrop is just bad. I hear you. But if you looked at the bank specifically, is there anything in particular that's got you wigged out, or we would even think about using words like systemic? I mean, look, there's a lot of talking heads out there talking about AOCI, commercial real estate, right? I'm not particularly worked up on those things, certainly not systemically, you know, isolated example. Is that fair?
Well, that's yesterday's problem. Today's problem is cost of funds.
Yeah.
So to be competitive with a fintech who's being given money to go bankrupt, that's pretty stupid to try to even think that way. So if you compound your mistake that you made on AOCI by going out and raising your cost of funds at a time when you know they're probably going to have to lower interest rates, and you know everybody can debate that from a macro, you know, the Keynesian economics and supply side. You guys, you're not going to fund this debt at this level without crashing everything. And you can't have a frozen mortgage system and a productive banking system. Those things just don't make any sense. Okay. Yeah. You're going to have to do it. And so when they begin to do that, let's hope it thaws out the mortgage, which, okay, now gets us in a position where people do want to make a loan, whether that's at higher prices. Okay. We're talking about higher real estate prices. You see my shocked face? I mean, guys, it's been this way since I was born. Yep. They're always that way. And I remember when I got out of college, me and Lisa talking about how does somebody afford an $80,000 house? You know, it's unbelievable. What kind of, are they rich? How do people afford that kind of thing? Okay. And now everybody's talking, well, how do you afford a $450,000 house? Are they rich? You know, how do they do these things? Hell if I know. I'll never figure it out. Maybe everybody's rich with me, right? So regardless of that, these things go up, and that's opportunity. And as long as they don't default, that's a good thing. You know, the old adage is anybody can make a loan, takes an expert to get one paid off, right?
Yep. So
bankers are experts, but right now we've got a regulatory environment that really, really is, it's the opposition of banks. It's actually not helping banks. When somebody says, well, what would you do to lower cost of funds? Well, you know, there's a bunch of ways I can talk about. I mean, we've got BaaS operations everywhere. We've got fintechs all over the place. You've got, I don't even like the word neobank. I don't even like the concept of a neobank, but I damn sure like the idea of a direct bank when you just create a separate brand, right? There's nobody that says your mobile has to be Q2 and that's it. You can have any other thing you want out there. It's the internet, man. Okay, so what we do right now, this is important. bankers suck at making decisions, but they think that's what they're supposed to do. I remember watching in the late '90s. I mean, bankers were sitting down, like, I really thoroughly researched this whole internet thing, and after being told we have to have a website, I just disagree with that. I don't think we need to do that, and I don't think it's a flash in the pan. It's this thing. As soon as we hit an economic downturn, blah 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 blah. Heard it all 100 times, and then we just grab onto shit that literally is insane. I'm not saying AI is insane, but we grabbed onto that one. That's positive. Hey, we're going to invest in that. BaaS, oh my God, you can't even say that in front of a regulator. All right. So who's wrong and who's right? So let me just give you my parameters here. Bankers, don't make a damn decision. Educate yourself and stay in the game. Had you made that decision to turn your back on the internet in the late '90s, you'd be the dumbest banker in America. Okay. FinTech is not going away.
But hold on, the point though,
right now,
you could have waited till 2003 to have a website and been fine. Your point is make a decision for or against remaining.
No, my point is this: what we do as bankers, we form a committee, we evaluate information, and we make a decision on it, and that's final, and that's the end of it. Mm-hmm. And if it was the wrong decision, somebody loses their job 5 years later, we'll revisit that decision with a new committee of people and come up with the right decision. And then we made another decision. Nowhere in the process does somebody just sit down and go, maybe this is something we need to get highly educated on and stay on top of. Instead, we read all the negative headlines, SVB, or let's talk about Synapse, or let's look at this, or that BaaS. Oh my goodness, it's a disaster. Better run from that one. Mm-hmm. Okay, I'll grant you this. If you're a BaaS bank right now, the regulators, oh my God. Okay, that's on them. That doesn't mean it's a bad idea. It just means it's a difficult time to implement that. And here's a news flash. We still have almost the exact same number of fintechs, even though we've lost a whole lot of them. Yep. And we actually are still growing the number of BaaS banks. Yep. But you didn't know that. The reason why they're paying you to lower your cost of funds.
Yeah. But look, just from the calls and conversations, I mean, the BaaS topic is a big part. I would say core and core renewals is probably the number one call I take. I take a lot on digital in general, right? And then BaaS for sure is top 3 things. I mean, there's a resurgence, and the difference is nobody wants to talk about it publicly. And to your point, nobody wants to mention it to their regulators. But I talked to tons and tons in the last 3 or 6 months that are quietly working on strategy and doing things. That's interesting. That's interesting. So let's break that down.
And that's what doesn't come out with all the people and all their opinions about it. Now, the thing that burns my ass is, 3 years ago, we're over here and look out for the connectors. They're going to kill this whole system here. All right. Well, it's a little too big to fail at this point, so I'm not worried about killing the system. But boy, they sure got the regulators' opinions tilted in this way. The next thing, we talked about the internet. Now we talked about BaaS banking, right? And AI a little bit. The next thing is payments.
Yep.
Payments is going to undergo a fundamental shift. So like you said a minute ago, we get so many calls on core. Should I change my core? Who do I change to? How do we go about that? And we help a lot of people with that. And I don't want to sound arrogant when we say this, but being technology experts, when all the experts are out there now talking about BaaS banking and maybe even using the word connector occasionally. And it's like, man, good God, you're 3 years behind all the time.
At least.
Right. And they're now catching themselves up on that. That's not even the topic today. Right. Neither is AI. Yep. That's a 2-year-old topic. The topic today is APIs, is payment services. And the implementation of that, you and I talked about it. You're saying basically every bank should have their own wallet. Okay.
Well, they will.
And I turned to you when you said
they will have the Zelle wallet, right? Or whatever it ends up being,
Yeah, man. This is what's great. When me and Tanner have these great talks with each other on Friday night, right? I bet 1,000 times I've mentioned, why in the hell, when we had such an opportunity with a mobile phone, did we create online banking on your phone?
The gap analysis,
somebody argue with
the
me
RFP
on that.
process, the consultant.
In the gap analysis, when you sit down to figure it out, that damn near everything in your mobile vendor, you can get on online banking.
Yep.
Now, does it give you a different brand for your bank? Does it give you a different payment opportunities? Does it allow your users to create their own accounts and shift money all over the place? What does it do?
Well,
It does the same
part.
shit as the other thing does.
Chime showed up with a freaking debit card app and has got up to 7 million active users.
Boom.
Here's your sign, right?
Okay, this is after the other idiots that are now you're listening to told you there were 23 million users, and we're the whole time going, that's not even close to reality. They didn't even have that many downloads. We have a little data company. You know, hey, we're cool. We make money. We're good. We help bankers as a passion.
Yeah.
That's something that, you know, and everybody's like, why don't you just charge the hell out of these bankers for this information? Well, you're doing this stuff for free, man. And it's like, because everyone else is full of shit and they're bullshitting their way through this thing and they're lying to these people and charging them a fortune to do it.
You said
And
it.
they're the ones that have 175,000 followers and everybody listens to every word they say. And it's like, this is kind of crazy, y'all. We're actually listening to the people that told us all of these little idioms that we've heard all of our lives. That's what they do. They're not listeners. They're not thinkers. They're talkers.
They create idioms. That's great. Yeah. So I want to hit something you said. You talked about payments being the next thing, right? And I think to your point, I mean, pay by bank. Wow. Massive. Yep. I mean, we're going to watch, but already starting to see a lot there. That's a big topic. And then
finance.
Oh, yeah.
Almost every bank I know doesn't have, first off, they can't even understand the concept, can't explain the concept, and are completely unequipped for it.
It's a tough one, but think about it.
Yet they want to talk to me about AI, and I'm like, oh my God.
Right. But think about this. The embedded finance side, I mean, in short, we're talking about taking merchants or retailers and embedding banking chartered, what I would call chartered services, right? That require you to be the sponsor. Think about the flexible credential concept that Visa just put out. That is interesting, right? So that side of the world, essentially, think about, we've talked for years, digital identity, right? And that whole concept, that's their stab at it. I think they use the word being the network of networks. Well, so I want to talk a little bit on just the BaaS side. I know we touched it, but everything that's going on there, and I mean, we've got all the data and looked at this in depth, and I would tell you that if you were talking about logos, let's say logos of fintechs, and probably similar for sponsor banks, probably half-ish affected by the connector model, right? Not the good half, not the high-performing half, right? The 99th percentile of the dollars, the transactions, the downloads, the volume has always been on a direct model since, I mean, 15 years ago, right? Always been direct. And so it was never a real challenger to that. What the connector model was obviously it was the easy button for a reason, that opened the door to lots of fintech startups and lots of banks wanting to play that wasn't exactly ever going to shake out as we've long believed. Is that fair? What do you think of what I just said? Does that make sense to you?
That's great. There's 140 sponsor banks right now. There's 15 players that are really big, and there's maybe 5 that have fucked it up for everybody.
Mm-hmm. Agreed. And what's funny is
now, you can't name the 5 and you can't tell me exactly what they did that screwed everything up for everybody. Maybe you're talking to the wrong people.
Right. There you go. That's really well said.
Put something in place that's going to make you money and help you and serve your customers better. This is what we're talking about. And this is the part where, I'm the most strongest supporter of community banking that's ever lived. I mean, fight over this one. But at the same time, we have to realize, I got in trouble one time when I was a youngster, when I was dealing with some really smart people, and I knew they were smart enough to talk about some of the things we were trying to fix. But rather than fix the problem, they wanted to talk their way around it. And I used the word intellectually lazy. They didn't like that. And most smart people don't. Even dumb people don't like to be called intellectually lazy, right? And I think that's really where we're at right now in banking. Everything's gone so fast, supersonic, and everything's so screwed up. It's like, what do we do? How do we make a loan? How do we get deposits? Okay, if you're still asking that question and you haven't figured it out, maybe you need to ask the people that can help you figure it out. Because you don't like the answer, maybe you need to work that problem. That's the problem.
But
And
I think
all
you
we're doing
mentioned that.
right now is forming committees and making decisions, yes or no, and moving on. We're not trying to problem solve our way through things in a normal and efficient manner. When you get to BaaS, you know what the whole problem is? Who owns a friggin' ledger?
Yep. Well,
Okay. When I take I know that, let's call them my customers, they're actually the FinTech's customers, and I'm going to force those people through some prove your own account transaction bullshit through a judge to be able to get my money back. I'm responsible for that as a banker. Take responsibility for that and own the ledger.
Mhm.
Well, that's too expensive. Now we got a problem. Bring that problem to me and we'll figure that one out. That we can do. And we did. So, I mean, these things are not unsurmountable. You just have to figure out where's your barriers and work the problem. And you'll find that there's already people that have thought their way through that and have the answers for you. And they're happy to give them to you.
But I want to point something out. And I've thought a lot about this. I tend to think a little outside the box. Half the time I'm crazy, but half the time it works out.
Well, I'll give you one thing, man. You're not intellectually lazy. I'll give you that.
In the last, call it 10 years or so, we have had and seen some of the most high performing banks pound for pound, meaning the little bank out of nowhere nobody ever heard of that is off the charts in every financial performance metric, right? And so we're actually right now we're in the best time in literally thousands of years of banking at seeing the smallest and most nimble do things that nobody else thought of, right? And take off and make a fortune. And so there's a hopeful message in that. The other side is we've also never seen a time where sort of the average or the masses are just more challenged, right? If you're like everybody else, if you could draw this up and say, what does an average bank look like? You got to love it, right? You've been asked that one before. But if you could, and what does an average bank do, right? They call such and such vendor and do it. It's probably the worst of times for that picture, right? Whether it's for, to your point, traditional methods of deposits and lending or technology, everything else, it's a very difficult time for status quo, right? And so I think to your earlier points about making decisions rather than kind of like lifelong learning, now's a really interesting time where I think the banks I'm seeing be most successful, and it's not because they have the tools, right? A lot of them look like me, don't exactly have the background, the education, the where, any of it, but they're really interested people, right? And so is the rest of their leadership. They're going out, they're learning, and I mean, it's incredible what they're able to accomplish when they're, getting out there and talking to people, and just as a strategy of let's see what's going on. Let's do a little exploration, but making a really, I think what's the hardest decision, you got to be able to look in the mirror and say, I'm not going to make it like this. I got to change. And that's a hard thing. Nobody wants to look in that mirror. It's a tough one, but
Okay,
those
so
are
this is the quagmire of the industry right now. You've got a whole segment. We have to have 100,000 people. We need $300 million, blah, blah, blah. Well, it's only a big guy can do this. Okay. The greatest opportunities are sitting right in front of you. Okay. Intellectually lazy. As I say that, I actually want to slap myself in the face. I've gotten more calls in the last year from bankers at the worst of times trying to figure it out.
Yep.
At the same time, I sit and kind of lecture about, gosh, all they do is form committees and make bad decisions, and then they say, okay, we check that out and let's move on, right?
We'll give you a pass.
Actually, there's a hell of a lot more people, and people talk to me about this, bankers need to get engaged. I'm like, actually, there's more bankers engaged right now than I've ever seen before. And here's the weird part. It's creating a gulf of knowledge,
badly,
haves and the have-nots of knowledge. It's not a matter of how big is your bank. It's how much intellectual property do you own inside of your bank? How much do you know about AI? How much do you understand about pay by bank? How much do you really understand API payments or what you were talking about with the digital IDs, right? How much do you really understand how this system works? And almost there's a gulf of haves and have-nots there. It's not a size issue. It's those that they're not trying to make a decision. They're trying to get smarter and understand things at a granular level. And you'll find it in younger bankers more than you'll find it in older bankers, which, I mean, I don't know if that surprises anybody or not, but
that's hopeful.
But here's the key. That right there, man, I can't make them swim to the damn boat. the ship sank. Now I can get as many as I can in the boat, and the people that are swimming the fastest, I'll take them in as fast as we can save them, right? The people that are over there going, leave me alone. Can't you see I'm drowning? You got it, buddy.
Yeah.
That's the way it's going to be.
Well said.
And I believe in the future, what's going to change banking is the people that are motivated to stop making decisions and motivated to keep learning.
Well said. All right. Take a minute. That was an excellent final thought, by the way. But I do want to give you your chance for final thoughts of just trying to, and I think you did a good job today. I mean, intentionally, I wanted us to jump all over the place, hit key issues, but look at the macro, right? And what do we do about these bigger problems? Because we're not talking about it, but macro thoughts, man. Anything else? Final thoughts?
First off, let me say, I think we are doing something about it. I mean, this conversation is a great start, but Matthew Smith, my goodness, man, reach out to this guy. He'll help you. There are people that are willing to help. All you have to do is ask for it. Okay, that's a really good start. Fingers on bankers, all that. The other thing, man, this too shall pass. If you live long enough to get gray hair, you're lucky. And what you'll find is that, oh, there's a new piece of scientific information that says aspirin is good or aspirin is bad, or you shouldn't eat eggs, or you should eat eggs, or you should do this, or you shouldn't do that. After you watch this circle go around 165,000 times, you know what you figure out? It's a hard substitute for common sense. And we're not really rediscovering that much stuff. We're renaming it, is what we're doing. And in the middle of, I would call it a banking, I don't like the word crisis, difficult time, right? Difficult time, and economically a difficult time. I think, we've just got a lot of things wrong in our country right now. We got a lot of things that are broken, a lot of things that can be fixed. But guys, I guarantee you the sun will come up tomorrow and things will change. And it's up to us to make it better.
All right. Well, normally I would say catch you next time, see you later, but I'm going to see you in like 2 days. So I'm going to come drink a beer with you. We're having a party. It's going to be fun. So I'll see you then, man.
Oh, man, I'm looking forward to this.
Cool. All right.
It'll be great.
See you in a couple days.
Love
I
it,
mean,
buddy.
like too. See ya.